All right. So, hi everybody. Welcome. Know all how these works. The only person who doesn't know how these work is Luis, who's somewhere on in the interwebs, trying to make his way in. So he'll be here soon. Um, so to get started, like this is great. A question, right? And we can actually, I think the questions, Artash, that you have will get us started talking, right, about some things that might be interesting. Sovereign wealth funds. What are they? What do they do? They're literally investment portfolios held by sovereign countries. Not a financial expert, but my understanding of them is they tend to be organized a lot like a hedge fund in a sense, right? Where a sovereign government will actually set up an institution or an office to administer it. And it's run as an investment portfolio. And its purpose is to create returns for the sovereign government. Where they emerged from, and the reason why we don't talk a lot about them is that there's not a lot of democracies that have them. And if you think about it for a minute, you would understand why democracies, like, could you imagine um, like a pool of like $5 trillion that is administered by the US federal government, right? And it's invested in things around the world. And its leadership is sort of expected to produce returns. Like, just politically, it's just a nightmare. And most democracies would be like, no, like, I don't want you, the government, to have, a substantial share of our GDP in terms of investment exposure. I want it back in my pocket, right? So I'm going to vote for politicians. The one standout to that is Norway. Norway has one. Norway's is very, very large. I think it might actually be the largest one, um, which is comes from the fact that they have large, very lucrative oil resources, but they're a very small country and not a lot of people live there. Actually, it's interesting. The one in Norway is in the news right now because it has added, I think, $1 billion to its sovereign wealth fund in the last year, and that is a direct windfall of the war in Ukraine. So Europe is looking to Norway, and to a much lesser extent, North Sea oil, which is off the coast of Scotland, and the Netherlands. The Netherlands is also an energy producer, to try to offset the gap in energy availability that's caused by Russia's, let's say, vague, thinly veiled attempts to turn off energy flows to coerce the European Union. They keep insisting they're not doing it, right? They keep saying, no, we're not doing that. The Nord Stream's down for maintenance for 9 months. That explosion was probably some fishermen. Like, I don't, what are you talking about? And they're actually debating about whether or not they should keep it, right? Like, whether or not Norway should actually keep this windfall and put it in its sovereign wealth fund, or if it should donate it to Ukraine, or if it should, sell oil at a lower rate. These kinds of things. So that's what a sovereign wealth fund is. I will say that the biggest and most active, in my understanding, are the ones that are run by most Middle Eastern countries. Like, most
Right.
Middle Eastern countries have them. They're very large, and they make sort of broad investment.
And
Right.
that's what I thought was interesting that these SWFs are basically their geoeconomic, like one geoeconomic tool in a larger toolbox where they're not directly being invested back into their home state, but they're kind of using this as economic favors to other states who might need them. So I thought that was kind of interesting, which is why I'm like, how did I not know about this? And how about Qatar has one of the largest sovereign wealth funds, and it's used it to subsidize wars and whatnot, and geoeconomic favors. It was insane. I didn't know about it until a week ago.
Yeah, and this gets at a key part of the argument. Um, yeah, and I just looked it up here. I just grabbed it, and I'll shove this up on the screen as we talk about it, and then we can kind of get at, I think, one of the implications of the one of the arguments that's floating around here that we can hopefully talk about. Um, so here's the list of what they looked like in June. Norway's has continued to grow. So Norway's is the biggest. This is in billions of US dollars, right?
Hmm.
So these are huge funds, right, that are
Wow.
invested. China, China, Abu Dhabi, so UAE,
Yeah, UAE.
Singapore, Kuwait, Saudi Arabia, Hong Kong, China again, Qatar, UAE again. UAE again, Singapore again. So there's Korea. So South Korea has one. Oh, there's Luis. And a small one of Australia, but 183 billion, where this is 1.3 trillion, right? Now this gets at, hi Luis, are you there? Did you make it?
Yes, sir. Thank you so much for the link. I do appreciate it. Thank you.
Beautiful. So we were just talking about, Zartasha asked a question about sovereign wealth funds. What are they? Where do they come from? And I was explaining that they're funds held by sovereign countries that invest in other countries, and their express purpose is to create a return, right? And some of them have been quite successful, right? I think Blackwell and Harris mentioned that it's the UAE's, one of the UAE's ones that manages to return something like 10% a year or more. That's pretty healthy, right? But yeah, so this gets at this idea that Blackwell and Harris, and I don't know what I think of this argument, right? Like, I'm not sure. I don't know if you've gotten a chance to look at the lecture that I put together today, but I engaged in a little bit of like empirical criticism of Blackwell and Harris. One of their arguments is that, you know, it's a big, scary world out there because we have these countries like China, like Russia, like some of the Emirates and Middle Eastern countries, who through mechanisms like sovereign wealth funds, right? Not just sovereign wealth funds, but like sovereign wealth funds, are able to sort of flex geoeconomic muscle in ways that democracy simply can't, right? So the idea that you can use your sovereign wealth fund as a carrot, right? Do X for us, you know, China Investment Corporation will invest this much in, you know, a particular sector of your economy, right? Another version of that that I think Marcy and I had talked a little bit about was the ability to get ostensibly private sector companies to do things that are beneficial, right, to your geoeconomics. So one of the examples that that stood out was China's ability to get its national air carrier to purchase a fleet, like a set of airplanes from Brazil, right, to correspond with an attempt to create a trade deal. The idea here is that this manifests particular kinds of geoeconomic power that democracy simply can't do, right? So we talked a little bit about, before Luis got on, we talked a little bit about how like sovereign wealth funds, like they're just not, I don't see a world where the United States has a sovereign wealth fund, right? Like trillions of dollars led by a government, like a bureaucratic organization appointed by a politician, right? I just don't see that in a world happening. And then secondarily, like the Trump administration tried it, right? It tried to get private sector to toe the line on what it saw as economic requirements. And then just the private sector just sort of shrugged and says, no, I'm not buying this just because the government told me to, right? I was just simply going to say, Marcy, and then you can get started. I mean, I was simply say, I don't know if this is the big boogeyman that Blackwell and Harris are sort of painting it as, right? Like, I'm not entirely sure these companies wield huge amounts of geoeconomic power because they control these things.
I have a couple of questions. How does the United Kingdom, let me phrase both questions. We talked about that the other day, that it's a democracy, but it's got companies that it interacts with that act on behalf of the state somewhat. That's the United Kingdom, I think. But also, if the sovereign wealth funds, thank you for asking that, Tasha, are used for leverage and blah, 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 how are they getting money back? How does it earn money? I can see how it would create leverage, but I mean, I need to buy into one of those funds, so they're getting good returns.
Well, that's just it. You don't, right? So like,
But it
what
said
it is so like, this is the Norges Bank. This is Norway's sovereign wealth fund, right? And you can figure out, so this is this total value. Now, it's important to know that where the money comes from in Norway's case is that it doesn't come from taxation. So it's not that the government actually taxes people and then
Mhm.
puts money into a fund. What it is it takes a cap off of oil royalties from Norway's oil drilling, right? So every time there's a barrel of oil, a certain amount of it goes in. The Norgesbank is colloquially known as Norway's oil fund, and it was founded in 1969 when they found oil. But then it goes about investing like any other fund. Like it runs just like the mutual fund that you would buy into through your bank, right? Or any sort of portfolio investment activity. So like even here, it owns almost 1.5% of all shares in the world's listed companies. So literally this fund decides to go out and buy stocks, like invest in companies, just like your mutual fund does. And to try to create a return, which means it's managed just like a regular fund. Now, it's important to note that that's a contention that Blackwell and Harris are arguing against, right? So when you ask these countries, well, what is this fund for? What does it do? It's political, right? And they will say, no, it is not. These are not political. A lot of them will sing the same old song like, no, it's like a central bank. The people who run the fund are appointed. They are non-political. They're understood to produce a return, a reasonable return on our investments to help grow our fund. And that's what it's for. Blackwell and Harris are making the argument that in practice or in potential, they're not that. And this was also something that I picked up on when I was reading Blackwell and Harris. A lot of the things they're talking about are not things that happen right now. They're potential things, right? So I think that that's an important differentiation. But yeah, but that's just it. So it's not, which again is why, like, I don't think we're worried about Norway. But funds run by the Chinese government, by Saudi Arabia, by UAE, the contention of Blackwell and Harris is that these are potentially actual or potential geoeconomic tools, right? For them to manipulate other countries economically, right? I mean, that is one sort of question, like empirical question. Like, do you see this as the kind of thing that a state could wield as a geoeconomic weapon? I mean, I'm not sure.
I can
Right.
see it as a tool of economic strength, if not a weapon. To me implies aggression. So strength could be a preventative thing or, clout in an arena, but I can see how it could become a weapon.
Yeah, I see it as, I can see it as both. And the way the
Yeah.
weaponized is when we were in previous classes, we've talked about, a lot of the terrorism classes that we've had, how are they getting funded? And this answers kind of a big question that we don't, we could maybe assume that there's certain states where we know that they're bad actors, where we know that they're state-sponsored terrorism, and they have SWFs from other countries that are maybe funding their organizations.
There could be underhanded manipulative uses of it,
Yeah.
which I wouldn't think.
Because it doesn't seem like it's
Norway would
very
do
well
that.
regulated. And that's why I was confused as
Yeah.
to these funds. It doesn't seem like there's a lot of clarity as to where these funds go. They can kind of go wherever they need to go.
I
Yeah. Go ahead.
agree with you.
Joey.
Okay, so just on my part, I think it's about power. I think it's about buying other countries in so many ways. The influence, of what they could get out of it, and the way everyone says it's about the return, but it's about the power that money could carry.
So, but I mean, this, I think it becomes an important analytical question for us, right? So if you take sovereign wealth funds and you set them aside, right, by themselves, and you look at them, yeah, okay. So like we're talking about, so one question, I guess, is how much money are we talking about, right? So let's just take an example of, so the largest Saudi one, public investment fund, $620 billion. And then let's just go and ask Saudi. So I just found a money that they give out $1.5 billion in foreign aid each year, just to Palestinian refugee camps, right? So like, and then we could talk about its expenditure on military affairs. So like, one of the things you have to do is put it in context, right? So, and this is one of the things that Baldwin is hinting at, right? Like, you take some of these numbers and you pull them out of context, you go, that's a big number. Like, yeah, it's $630 billion, it's a big number. But I'm wondering if the existence of a sovereign wealth fund is the thing that actually creates the power that Saudi Arabia has. Like, so Zartash has mentioned like sponsoring terrorist groups. Saudi, like Iran sponsorship of like Hezbollah doesn't require a sovereign wealth fund, right? I guess there's other ways for states to do that. And that was one of the things that I was thinking about as I was reading the Blackwell and Harris book, is not that these states are secretly okay, right? One of the things that they did get at though, and this is another question about, so owning of sovereign debt, right? So maybe we can add that in too, right? So Blackwell and Harris make a big deal of this. This has been a huge deal for a long time, right? China owns huge amounts of US sovereign debt, which is not that they own consumer debt. They own consumer debt as well, right? They own through securities and other things. Lots of countries own US sovereign or US commercial debt, right? Like you can buy it, you can buy those securities. This is sovereign debt, which is usually denominated in T-bills, right? Treasury bills. The question becomes kind of like a sovereign wealth fund. This has always been argued that it creates a huge amount of leverage, right? That it could potentially mean that China could get the United States to do things it otherwise wouldn't do by threatening to dump all its T-bills, right? But that hasn't happened. And one of the reasons why it hasn't happened, or it might be unlikely, is because it would require China to take a $1.5 trillion bath, right? Like write off $1.5 trillion in their holdings just to make a political point, right? So I guess one of the questions becomes, same as with the sovereign wealth fund, like if your fund has invested, first off, not all of that money gets invested in one place, right? So it's not like China, like Saudi invested $630 billion in one place. It has a broad investment platform, which I know for a fact includes real estate in the United States, stocks in publicly traded companies, other kinds of investment. Are we actually creating mechanisms of leverage against other states when we do that, right? Like, does it amount to that? So, Luis, I think your point is right. We should consider this as a manifestation of power, not just as market exchange. That's true. I think you're right. And Marcy, I think you're right that, like, especially in terms of larger governments, it's not just sovereign wealth funds, but like how they accrue wealth and how they spend it. It's a little opaque, right? We're not entirely sure. Not like a democracy that has to publish a budget every year, right?
Well, I have a question when you get done. Okay.
I was just going to say to the three of you, does this amount to geoeconomic power? Like the ability to get states to do things geopolitically for economic reasons that they wouldn't otherwise do?
Can I ask a question?
Yeah, sure.
I don't know if there's a way to find out, but if any significant amount of debt from the U.S. that the U.S. owes, for example, to China, China could call it in if it's structured that way, and the way the debts are designed. There can be debts that are, balloon payments. They're commonly referred to here, but something like that, where they can just call in a debt if there's anything that leaves it open for that vulnerability. The other thing I could see happening would be, and I guess I'm a cynical person this evening, laundering money used in that manner through another country that doesn't have the superficial ethics, for example, that China might try to present itself as having, or Saudi Arabia might have, probably more so China and Russia, and laundering the money through another entity could make it serve as a weapon or a
Yeah.
threat mechanism.
So China currently owns $971.8 billion in U.S. sovereign debt, and it holds those in U.S. Treasury bills. The U.S. Treasury bills are the Treasury securities, bonds, T-bills, right?
Mhm.
They're structured the exact same way as every other T-bill. So if you buy one through your bank, it's structured the same way. But of course, you can trade U.S. Treasuries on a secondary market, right? Like you can sell. So outside of the way that the repayment of the T-bill has been structured, you can sell it on the secondary market. Yeah, one of the arguments has been for a long time, and that's about 13% of U.S. sovereign debt, by the way. So one country owns 13% of our debt. The argument would be that if they wanted to cajole us into doing something, they could dump those bills, which is what you're explaining, which
Right.
wouldn't be calling it in because it's a T-bill. You can't do
Mhm.
that, right? But you can dump them all in the secondary market. The moment you do that, they will devalue, right? Like their face value won't change, but their exchange value will, which will have negative effects on the U.S. economy. What it will probably do would drive interest rates up, right? Because the Treasury Department would have to figure out a way to keep inflation from running away and putting us underwater, right? But the argument would be if China did that, it would not be able to probably get $971 billion, like the face value of those T-bills, right? If it dumped them all at once, because it would create a downward pressure on that secondary market. They wouldn't be able to get that much. They would probably have to sell them at a steep loss in order to do that. And that has always been the question, right? Would China actually do that? Now, what you're saying is a well-trodden argument, and I mean that in the sense that yes, it's completely possible. It could happen. China has that capacity, right? They could do that. But as analysts, there are two questions that come. One's empirical and one's conceptual, right? One would be, well, would they actually do it? Right? I'm not an expert in geofinance, but like that's like saying I'm going to dump all my Tesla shares to get back at Elon Musk because I don't like him anymore. Yeah,
I'll
maybe
say
I
that.
will cajole Elon Musk into giving up control of Twitter, me and my other investors by doing that. Maybe I'll have the effect, but I will lose a bunch of money. And I am I actually going to do that? The secondary question is, well, what would China want to do to us? What would it actually that they would try to get us to change that we would do otherwise when faced with this threat, right? So it's the lever versus leverage thing. Yes, they have the lever. They can pull that lever. They can dump $900 billion. They can dump 13% of our sovereign debt, throw the bond market into disarray, which will massively change the way that the Treasury can issue new bills, right? Because that they issue them more or less in what they're currently worth. Yep, they could do that. But are there actually things that we would do to China that they would do that, and we go, you know what? Okay, we won't do it.
Well,
Right?
wait a that's like saying, well, we got the nuclear bomb, and take a look. We're holding this mallet over you if you don't blah, blah, blah. And there are certain things that maybe the United States wouldn't want to risk having that threat dropped. It's a threat tool if it's used that way.
Tesha, what do you think? Like you've done a lot of reading about like the Asian Infrastructure Development Bank and sort of like China's attempts to create new mechanisms for global finance, right? Like you've read a bit about this. I mean, where do your thoughts come down on this? Like this
I have
idea.
a huge interest in this and kind of Asia and Asian finance. And I don't know. I feel like there would have to be a massive drop in diplomatic relations. There would have to be, you know, huge economic waves going on, maybe a complete you know, change in the policy in the South China Sea where the US just blatantly comes in military. There would a lot of other steps would have to happen for China to dump, you know, 13% of our sovereign debt, because it would hurt them as well. I'm not going to say it can't happen. I'm just saying the probability of it happening is very low. So it's a lever that's there, but it's not one that either states want pulled, I think.
Yeah.
And also we are one of China's largest consumers as far as goods go, private goods. So they would be losing a huge market as the dollar drops into free fall. They'd be losing a huge market to where their goods go. And currently that's one of the problems they're having is they can't keep expanding because there's almost nowhere left to expand. Like they're having a hard time. And you talked about this a little bit in the lecture, is their growth model is almost unsustainable. So I think a lot would have to happen in the course of current events for that to happen. That seems like an extreme measure that I don't assume.
I mean, I'm happy to talk about that. I mean, that was me getting at when I read when I was reading Blackwell and Harris, I was reminded, I think it's Kissinger said that, like, when in doubt, just just say it was Kissinger, who basically said the entire Cold War was fought by two countries who thought their own governments were broken, political, parochial, and ineffective, and the other ones was coherent, directed, and highly effective, right? So like the same logic, like when I was reading Blackwell and Harris, I mean, I was thinking back to John Lewis Gaddis's book about the Cold War and going like, this sounds exactly like everybody in the early Cold War going, oh my God, like the Soviets they have so much money and they have a command economy and they're
so much. We do this with China. We say that they're so much more powerful than they are all the time. And they are powerful, but you know,
and they are capable of all kinds of things that we apparently are not capable of anymore. Like can build entire cities in like a week. Like they can physically do that. I was just trying to chip away at that idea, right? That like we do need to put them in context. But I mean, this was also why I took some time to think a little bit and talk a little bit about strategy as opposed to tactics and focus, right? That you're really trying to create an environment that's conducive to your interests. So like, yeah, you can, if you're China, you can dump treasury bills and have an effect. Are you likely to prevent us from like protecting Taiwan by doing that? I don't know. That sounds a lot like, you know, threatening Putin with some sanctions. Like, no, like I'm doing this for other reasons, right? Like I'm not doing it for economic reasons. But secondarily, I mean, you pointed out how there would be all these knock-on effects, right? Like you dump that, US interest rates would spike. It would perhaps throw us into a recession. That would mean way less consumer spending. China still deeply relies on selling us cheap consumer goods, the kinds of things that don't sell well when we don't have excess money in Western economies, right? Also, it would probably devalue the dollar relative to the larger system, right? Which would make the renminbi closer to the dollar, which would eat away at their exchange, right? Which is why China can produce things so cheaply. There would be all these knock-on effects, right? And it's just a wonder. A question is like, is that a more beneficial strategic environment to China's interests? Marcy, I take your point that yeah, maybe it is, but thinking about it in this wider context, I think is really important. Luis, what do you think? Like, what do you think about this idea that like these kinds of tools like a state like China could wield, do they amount to something that looks like power, or do we have to be a little more provisional?
You know, I truly think that the US market is very strong. I truly believe that that China wouldn't want to try to do by, you know, doing those kind of tactics. I don't see that it will control us. It won't hurt us. I think we could adjust to it. The US market is strong. I mean, a lot of people say it's not. It feels like We depend on a lot of other countries, but I truly think that China wouldn't do it. I think they'll like she mentioned, uh, they depend on us. They truly depend on us to buy goods from them. So no, I don't see it. So I believe that others would try tactics. It's like Putin's now with the energy against Ukraine. You know, he's using it as a weapon. You know, in such a bad way, if I may say that, that he's trying to take over a country that they've lost back in 1991 when the Soviets broke up. You know, and now he's trying to take over again, saying, hey, you know, big brother is picking up little brother again. No, he's tearing up the other country for no reason. And that's, of course, my opinion. But I just don't see China as strong as they think they are, sir.
I think that this gets at something that I mentioned quickly in the lecture, and something I hope we can talk a little bit more, because I think it's deeply important. It's really important for military power as well, like the fungibility of power, like the difference between, you know, counting tanks on paper and deploying them in the field and making gains, right? So I think Ukraine has illustrated the difficulty, like the lack of fungibility of power in some instances, right? Like there's absolutely no objective reason why the war should be going this way. But there's a ton of contextual, structural reasons as to why, right? And a lot of defense analysts, to their credit, looking back, were more correct than I about the conduct of this war. Economic power is the same, right? Like there's a gap between the power as you conceptualize it and then its effectiveness. So why I say that is, Luis, you were talking, one of the fascinating things, we talked a lot about the energy trap, right? When Putin's going to use energy and he's going to break the European Union, he's going to get them to make concessions, and he's going to get them to get hard-nosed with Zelensky and make concessions, right? And that's going to, and like, two things have precipitated that not being true, right? That hasn't been true. The energy crisis has not, and like the United Kingdom is going through an energy crisis. Like they have huge bills, like they're not doing great. It's not fracturing EU resolve. It's not fracturing Western resolve. Part of it's technological, right? So, you know, ramping up production in Norway, the North Sea and off of Holland. Also, it's technological. So Germany built new floating LNG plants in order to be able to take delivery of natural gas from other parts of the world. It's more expensive, right? But actually, in the notes underneath my lecture video, I talk a little. There's a great story on NPR today about how, at the end of the day, it's just not that cold in Europe this year. It's like they're having a mild winter, just like we are, and that gap, right, between energy needs and available is not opening. Like, at least it hasn't so far. Now, that is just like, you can't plan that. That's not, you know, that's not, I'm not going to turn around and say, see, NATO was right because winter. Like, no, but it does illustrate how these are far more complex kinds of things, right? And yeah, Russia is not reaping the strategic benefits from that energy trap that I think it expected.
Right. And I think Finland and some other countries in the EU are turning to wind power, like investing in it largely because of what's happening. And so they're kind of turning away from traditional energy sources. So it's kind of empowering states to, you know, accept other forms of energy and energy mechanisms, which then with the whole mild winter, global warming, you know, climate change thing, it adds another facet to this whole argument.
Well, what I was reading, and I wanted to whistle, clap, and cheer, like physically, because I don't think it gets said enough in these contexts, is Blackwell and Harris did talk about how, like, you want a fundamentally different geoeconomic order, you got to close the profit margin in oil. You don't have to get rid of it. You just got to close it. You got to make it more narrow. And you can do that with renewable energy, right? And all of a sudden, OPEC does not have this power anymore because, and this is a connected thing, because their growth models are reliant on producing oil and reaping those royalties.
Absolutely.
It's just that right now oil is valuable enough that they can play politics with it. If you push it down, they won't be able to do that, right? So I think
saw
that
what
that's,
happened during COVID, where oil was essentially worthless. So it can happen.
oh yeah, yeah. But I mean that also I think bears that point that Baldwin was making about like try not to look at the immediate effects of an economic strategy because they're probably not going to work, right? Like sanctioning Russia to prevent them from invading Ukraine, that's not going to work. Telling China you're going to sanction, TVs to keep them from invading Taiwan, that's not going to work, right?
Yeah.
That's not going to deter a power from doing that.
Yeah.
But the larger structural effect, right? Like by sanctioning Russia, are we forcing more countries to look more seriously at alternative energy, which will in the long term shape the economic context? Yeah, I think Zartasha, you just made a point that yeah, we might be doing that, right? We may be having that super long term impact by doing this. The problem is, it's just that doesn't fit the news of the day cycle, right? Like you can't get 4 hours of content on CNN out of talking about how 20 years from now there'll be more windmills in Finland because we sanctioned Russia, right? Now, us boring analysts,
no one's connecting those dots. I don't know why, but
well, because people you're not going to get people angry enough to listen
to put windmills up.
Refinance their student loans or do whatever they're going to do after watching the commercial break between Wolf Blitzer and whoever comes after Wolf Blitzer. I don't even know if Wolf Blitzer's still at CNN. That's how long it's been since I watched cable news.
Yeah.
But yeah, go ahead, Luis.
You mentioned about Germany, about creating going into the LNGs, and do you see or do you feel that they are trying to get away from being dependent from Russia? Do you see that they're trying to take action to saying, hey, look, we don't want to deal with Russia anymore? So is that correct?
I think so. I mean, because before the war in Ukraine, right, we in national security circles talked a lot about the energy trap, right? Putin's energy trap, like the idea that Europe had become so reliant on Russian gas and oil, right? And that reliance would be sticky, right? The idea that you can buy natural gas other places, but like getting it to Germany, delivering it, getting it into the system is not the same thing, right? You can't do that. You got to build new infrastructure. I think what's being illustrated is a couple things. One is, well, actually, we're better at building that alternative infrastructure than we thought we were. Two, that infrastructure itself looks like it's going to be sticky, right, in its own way. Like it doesn't look like people are going to clamor back to buying Russian oil anytime soon. Three, it's having the effect that Zartasha's talking about. I think and it's interesting because like I go to Poland every couple of years. My wife is Polish. They're all saying like, we told you so. Like they've been worried about the Russians since like 1991. They're coming back, like they're good. And everybody's like, no, Poland, they're like, no, it's gonna happen. You watch. And now here they're anyway, little levity. But yeah, and all of these countries are making very specific, like you'll notice that's why in Poland has been the most vocal proponent of Ukraine, been at the forefront of NATO's efforts to staff Ukraine, are more than happy to let Ukrainian soldiers and generals come into Poland to take meetings with like the US theater commander, which happened yesterday, right? Yeah, and they were the first ones to get their gas supply cut. And the energy minister in Poland basically said, look, we have a plan, we'll be fine. We've been trying to move away from, we saw this coming, we saw this. Okay, so you all know, except for Luis, you all know that my children tend to break in and say hi. Are you gonna say hi?
Hi.
Everybody
Haven't
says hi,
seen
but
you
you
for
can't
a
hear
few
them.
years.
All right, thank you.
Hi,
Oh, get the
sweetie.
dog. She's not interested in you or I. She wants the dog.
Show us the dog when you leave.
Isla,
Can
pick up
we see it?
Stashu and show them, and then you can take him, okay? The dog hides in here with me for exactly this reason.
Dog is smart. Hey,
Speaking of
puppy.
Polish, this is Stashu.
Oh,
Oh,
she's
Take
grown.
Stashu outside. Can you close the door, please?
Yeah.
Thank you. Yeah, I think it is precipitating that, right? And I think it's changed that logic. And I think that logic is here to stay, right? Like I don't see that shifting. It's also interesting because Germany was always, so to go full circle back to Luis's question, I mean, Germany was always the worst offender, right? Like Germany was always the country that like bought the most natural gas from Russia, was willing to do things like build the Nord Stream pipelines. Like when Angela Merkel was the chancellor, everybody called her the Putin whisperer, right? Because like she got along with Putin, like interpersonally. I'm pretty sure she spoke Russian. Either she spoke Russian or he spoke German. I forget, but they could talk to each other directly, and they would at summits. And Merkel was always like, well, you know, it's all about, you know, being balanced. And everyone was like, no, you're opening yourself up to leverage. Like you're opening yourself up to this. They're having the same conversation about their military now too, right? Schultz announced last year what he's calling the turning point, where they're going to start making massive investments in their military, but they still are doing things like, but they're caught in the middle. They're still doing things like refusing to send Leopard tanks to Ukraine. So I mean, these are more complicated, but yeah, Luis, I think as the hegemony in the room, right, like a great power, these kinds of things should be understood as our benefit, right? They should be understood as a region that is essential to our security. But I think at the end of the day, tertiary to our security. I think the real geopolitical threat is China, and we do need to find a way to start talking about China more. All of this is for the better, right? All of this, which is why it befits us to support these kinds of things, even if it comes with economic trade-offs at home, right? Like even if it means spending money and effort at cementing and creating these networks, even if there's a cost associated with them, right? So does that answer your question, Luis?
Oh, yes, sir. Thank you so much. I was doing a lot of research on that, and I kind of went on and I'll say about how other countries use different tactics. They use different strategies, and they try to take control or use the word power, or, you know, how do they get things in return? So,
Yeah.
you know, tell me, sir, thank you. You did answer my question.
And I think that's it, right? Like, I think the key to thinking strategically is not thinking about tactics, not thinking about what you're going to do today, not what you're going to do with one actor, but like how you're going to create an environment in which you will be able to have freedom of movement, right? Now, I started off the session by being a little cynical about, I think, the ultimate geopolitical value of things like sovereign wealth funds, owning of sovereign debt, right? Like, I'm not entirely sure those amount to acute economic weapons. Marcy disagrees with me, which is fine. But it really is coming down, I think, to that conceptual question of, well, I guess it comes down to, well, I think it was Artasha, you kind of interjected and said, well, it seems like something like, it would have to involve like something like Taiwan for us to even begin talking like this. And I guess that's where I say, well, yeah, if we start talking that way about Taiwan, I don't think it's going to prevent us from doing anything we wouldn't have otherwise done, which means there's no real power there, right? But where I do see something, where Blackwell and Harris's point, the section that I underlined heaviest and starred most was when they were talking about monetary policy in the dollar, right? Like about how right now, pretty much any financial transaction of any real size touches the US economy in some way. It's denominated in US dollars. It goes through a US controlled bank, or it goes through a bank that is party to things like SWIFT. This is a mechanism And not only is it a mechanism that allows us to dictate particular parts of the global economy, it allows us to borrow debt in our own currency. Zartasha is nodding her head because she does a lot of reading and research about the developing world in Asia. Denominating your debt in another currency can be crippling, right? Because the moment because if your exchange rates switch, you're underwater, right? Very quickly. So like being able to just, and then also because we're the reserve currency, to be able to borrow that money very, very cheaply. One of the things that we're going to start talking about, the debt ceiling again. One of the things that's always left out of that conversation is how cheaply the US government buys debt, right? Like our interest rates are very, very low. Which means, and then basic Keynesianism, states aren't people, they don't die, which means they can wait out the value of their debt and let inflation eat at it, right? If tended to properly. It has all of these effects. And these are things that other countries are starting to nose around and ask questions about. And even politically at home, we are starting to signal that we're not all that interested. Oh, there's the other one. Hi, Eric. Daddy's working.
Hi.
Maybe one drain break. You gonna say hi to my friends? Okay, bud. I'll be downstairs in a few minutes.
Hi there.
Pardon? They do know your name. They know you're Eric. Okay,
I have
bud.
an
So,
Eric too.
go. Okay, yeah. Those are things, so to get back, so those are things that like I think are probably the most important geoeconomic tools that the United States has, and we don't talk about them, right? Like we don't, same as our trade deficit. I think I mentioned this in the lecture video where the Trump administration, from a very particular domestic perception, wasn't necessarily wrong when it said things about the trade deficit, but it was not contextualizing that in terms of the fact that that trade deficit, to go back to what Louis said earlier, is a function of the fact that most countries are reliant on us for their growth. And we can understand that and we can set terms on that. So those are the kinds of things that I think the United States has that it can use that we don't talk about geoeconomically. We don't talk about them. We don't even talk about we don't talk about monetary policy in foreign policy terms, right? Like about what rising inflation in the United States means for the global currency, right? And those are the kinds of things that I think are really important that we don't talk about in the right way.
Yeah, I definitely agree with that. I think one thing we're going to see in real time now is Europe's getting more and more nervous about what we're going to do with our trade deficits, our debt ceiling, and if we're going to come up with a plan, because if not, the dollar is going to fall much quicker than we all realize. And what could be a mild recession is going to turn into a full-blown, economic struggle circa 2008 again. So I want to see how that happens. We're going to kind of see this big geoeconomic shift happening in the next probably few months in the United States because of our political discourse in Congress, because of the unevenness of power that it holds over the US dollar.
Yeah. All right. Anybody got any questions? All right. So I try to keep these to an hour. Again, their purpose is not necessarily to be, what did I start the lecture by saying? Not complete or like they're pieces. There's mostly just a chance for us to get together and talk. Do want to talk just briefly about what we're doing with the treatment thing. So I just to be clear, we've divvied up the readings. Over the course of the next few days, make sure you submit a treatment of some kind. If you want to write the 200 to 300 words and submit that, that's fine. If you just want to like sit in front of your computer and record a short video, we can do that too. The idea is just to get a sense of how to do this. I'll take the temperature of you three, but because Claudia's not here, I'll put it to a vote, so you don't even necessarily have to advocate yet. Do we want to do that? Because like a lot of the weeks do look a lot like this week. Do we want to continue doing this weekly? And I would just take your best effort as the grade for that part of the class, because you only have to do one, or not, right? Or do we want to just do this selectively? Does anybody have any thoughts?
Are you talking about the Zoom meetings here? Or-
No, the treatments,
Oh.
the reading summaries. Basically asking if you want to keep this division of labor thing going.
I like this because I don't have to read as much or in depth as much, I guess.
You have to go skim the other stuff, but you don't have to
Yes,
sit and read,
yes.
right? Yeah.
I know, but I don't have to like go through, like I normally do. So I like that, we can all pick one and kind of help each other out.
I like that as well. I think that we will all get more out of all the readings because having done the other way around, it's grueling and there's not really a lot of depth in a one-page summary for 9 readings or whatever. I see a benefit for everybody if we can keep doing it that way.
And I'm happy to say, I mean, if you want to do every week, you want to try to write a treatment and like follow the rubric and do it, I'm happy to do that, and I'll grade it over and over and over again, and I'll just take the highest grade. But I'm also happy to tell you, like, look, I'll give you some feedback on all of the ones you do, and just you can pick one week and kind of go, this one's the one I want to count, and like kind of go all in and do it. I'm happy to make it sort of short, like short videos or short things. So it's good.
So you're
Okay.
saying the alternative would be to not divide things up going forward. I guess that would be weekly. That's a lot of work too, but to pick one week and then each of us summarize everything for the week.
No, you would, what it would be is you'd be assigned a reading. So the assignment is for a reading, right?
Mhm.
And I talked to Luis a little bit about this yesterday. The contention here is to illustrate, to begin the skills that you would need to be able to distill these kinds of readings down to short things, right? So like when I was preparing for my I'll tell you the experience that like I had that led me to do this. I was getting ready for my PhD comprehensive exam, like 100 books, like 200 articles. I'm like, how do I organize this? Like, how am I supposed to read all this and like be ready for an exam? And my supervisor was like, look, you got to get to a point where you can read it quickly, you can find the key argument in the points, and then you can distill it down for yourself to like a cue card, like with a few, and not a full cue card, like a title and like an argument and then like 3 main points. And like, you got to get to the point where you can do that. And he was like, you got to get to the point where you can do that with an article in like half an hour. So you can go through like 10 a day. And I was like, holy shit. But it's a skill. What I learned is it's a skill. You can learn how to do that, right? So the assignment is to help you develop that skill. So the assignment as written in the course is that sometime between now and week 7 or 8, you'll be given one reading. So in this week, it would be the 2 chapters by Baldwin, or the 3, right? One reading, and you would write a treatment. What I'm suggesting is we do the informal thing like we did this week, where you kind of do a treatment for each other to help divide the load. And we do that every week. We can even, I can set up a mechanism for you to select your readings. So like, and you can figure that out. Like, I really want to do this one. Can I do this one? And we could do that. And then for the purposes of grading the course, there are 2 ways to go about it. And this does not need to be exclusionary. You can choose your own adventure. Every week I can assign you one reading and you do the treatment and I grade it. And at the end of the term, I just take the highest one. Or we can do the division of labor and you do something more informal, like you're going to do this week. And then one week you raise your hand and say, no, this week I'm going to do I'm going to do the assignment, right? And I want you to grade it. And I'm happy to let you do more than one because there's only 3 or 4 of you, right? Realize that if there were like 10 of you, you see how this works, right? Like you would be on deck like once and you would have to, right. Those are not exclusionary. I'm just asking, like, I guess what I need is a consensus statement from the class. Because if 2 of you say you want to keep dividing labor and 2 of you don't, then I can't really do that fairly, right? But if all of you say, yeah, no, I like this idea where I read one thing closely, I write a blurb for everybody, and then I get to go read the blurbs of everybody else, we can continue to do that. Did that clear as mud?
It's mud. Would we be able, I could see a benefit to, without having a lot of criticism involved, learning through posting them and discussing them, Sunday, getting feedback on which of the summaries or the treatments met your goals best, because I can see there might still be some feeling around in the dark, like, is this what is expected? And I would find it helpful to figure out, oh, well, Luis did a good job that week. I need to pay attention to that.
Yeah, and as I said in the screencast, I think my plan is to have a forum next week where we can have a meta discussion about, what was good about Zartasha's, what was good about Luis's, what did I learn from reading them, and then constructive criticism, right? Like, like, oh, Zartasha, like I did do that reading and I think you were right, but I think you missed like this slight part of the argument, or they had this other thing that I didn't quite, and just learning how to do that, right? Like how to, and I think that's fun, right?
And when are we going to get information on that final paper that's going to be coming at the?
There should be a summary in the information module.
In the schedule thing?
There should be a blurb, yeah. But what I can do.
I think it's got the rubric, but I'm not sure it has the assignment.
So what I can do is I should be able to unlock that so you can see it.
That would be hugely helpful to help us to plan ahead, if you don't mind.
Yep, module 7 is unlocked. Actually, I'm just gonna do is unlock all of them. I'm literally doing it as I speak, so bear with me.
So if I may, I'm getting a lot out of this discussion on Zoom. Everything that I've been reading, and like she mentioned, it's a lot of reading. I don't mind. Definitely, I love the articles that are coming out. It really enhances everything that comes together, and it's a great thing. And like I said, I'll definitely read the books. I'm getting it, but I love the articles because it kind of just like it just brings everything together the way I see it, and everything that it brings everything into perspective. That's the way I look at it. But no, I truly like how we're doing the Zoom.
Yeah, and the Zoom call can vary based on the group. Some groups have come out and told me, like, I just want something that approaches a lecture. And I'm like, really? That's what you want me to do? I can do that. Some groups have said that they want it to be a little more structured, like with specific discussion questions and breakout rooms. Other groups are more than happy to just show up and ask a few questions and let the conversation flow. I'm happy with whatever you all want to do. So I'm happy to hear that feedback. So as I was listening to these, all the modules in the course shell are now open. You have them all, the whole course. You want to read ahead, read ahead. You want to get started on future assignments, get started on future assignments. It's all open. Yeah, and also I just point out that, I'm available outside of this time too. So if you want to give me a call and talk over some things, or you just want to chat about something that you found in the readings, My office hours are my office hours, but I'm usually around. Just shoot me a note and tell me that you want to talk and we can do that. So yeah, consistently people talk about the Zoom calls as really important. And I think they also help with a sense of community. It's super hard to like be engaged in a course when it's just disembodied paragraphs on a discussion forum and profile pictures and not people.
Yeah, we've had some awesome discussions in previous classes. I really love the Zoom meetings.
I agree.
We will
Yeah.
continue to do them. They will be a weekly fixture.
Cool.
So,
Now,
all
I'll
right.
try not being the mystery face here, just not quite. So-